Let's take a look now at the market movement with Mr. Joseph Busha from the JM Busha Investment Group. A very good morning to you, Mr. Busha. Good to have you with us today. So what is it that we can expect this coming week as far as the markets are concerned?
Morning, Ms. Ngobeni and the viewers of eNCA. Certainly, I think last week, we saw for the week ending last Friday, the 10th, the equity market clawing some few of the losses back up, 1.1% up. You saw also that, for the past 14 days, the equity market really recovered. We were looking really dire in terms of our returns. So we are up about 3% for the past 2 weeks, but certainly still down about 7% for the past 6 months. That basically means that, we just kind of growing out of negative. So this week, we might expect a little bit of recovery, given that the miners were the biggest losers last week. Impala, I think, topping that one up with about 9%. We also saw the luxury goods Richmond down about 5%. Today, the Dow Jones futures is pointing downwards, but I think we might get a little bit of recovery in our miners, and I think Hang Seng and Nikkei all looking a little bit flattish.
Is the market still reacting to the U.S. Fed's comment regarding the debt rate cycle and that it might actually not even be over as yet?
That's very true. We saw basically that, last week, I think all commodities, apart from iron ore, were down. We saw that after they left rates unchanged, the rand was a bit stronger. We also saw that Brent crude oil still coming down. But I think the Fed chairperson, Jerome Powell, said that, the rate hiking cycle might not be over. And that might change a little bit in terms of the tone when he gets hawkish like that. But we believe possibly, they will just warning, I think, consumers and the market to be cautious. I don't think that they're going to be any aggressive rate hikes anymore. But certainly, I think that really just rattles the market a little bit, and people will start moving into the safe havens, which is the U.S. market, if rates go up, because it means that their yields will go up, become more attractive than some of the riskier assets. And that basically weakened our rand a little bit. We saw that the rand now is sitting at about 1877. I think after we're looking a little bit stronger, I think we came down to about 1825 to the dollar. But we also saw that, by Friday, Brent crude oil was ticking up a little bit. We thought it was going to hold below $80 per barrel, but we're sitting at about 81.70.
We are also, Mr. Busha, expecting the Monetary Committee meeting soon. What ought we to be expecting as the outcomes from that?
I think that the decision is going to hold rates unchanged, given the fact that I think the rand, certainly as long as it remains below 19, and also Brent crude oil, which really have a massive influence in terms of the rate decision and inflation in the country. We might see that, they will keep rates unchanged, because if they were to increase, whether by 25 basis points or 50 basis points, that could cause our economy to borrow. And certainly, in terms of the consumers, they will be under pressure. Credit extension will certainly slow down as well. And I think, the figures are certainly pointing that, things, given obviously what America said, things are still a little bit touch and go to the negative side or to the hawkish side. But I think for us, if the rand remains below 19 and Brent crude oil remains below 90, that could give good reasons for rates to remain on hold.
How would the finance minister's mini budget, which he presented a short while ago, actually impact the level of discussions and, I guess, the agenda for the MPC committee?
Certainly it does. I think broadly, you see that they have to move in sync with each other. But although the central bank, Reserve Bank, said they've got a specific mandate, which is really to contain inflation between 3% and 6%, they have to consider the overall direction of the country in terms of the fiscal policy and so on. So it will certainly have an influence, but I think the central bank continues to maintain that they are very independent. They are focused on their mandate, which is to keep inflation between 3 and 6. Currently, we're sitting at a 5.4, ticked up from about 4.8. But I think, as I said to you earlier on, given where the rand is and if Brent crude oil remains below 90, we might see inflation possibly coming down a little bit and hopefully into the midpoint of 4.5. What would basically make the governor happy?